Good morning. Welcome to IG's Early Morning Call. It's Friday, 17th of November. Let's take a look at the headlines as we see traders unwind what was an early positive start to the week, and with concerns now about the outlook for global demand. It's really changed the environment in which these indices are trading. We're expecting declines, certainly in France, possibly in London. Germany looking a little bit stronger than might otherwise have been the case. But one of the reasons why we're expecting a drop in shares in London is that we've got oil at 4-month lows. Concerns about the global demand continuing to dog the oil markets. And that is our second headline this morning. Third headline, retail sales. We've got a drop for the month of October of a margin of 0.3%. We have been expecting an expansion of 0.3% month on month. Let's take a look at volatility. Down again today, indicating that we are expecting risk on, but I don't think that's necessarily going to see Friday's trade be a particularly bullish day. That being said, money continues to be invested in those equity markets. We are at 2-month lows for volatility as we see a continuation of this tick down. As I said, it's a question about how we interpret this now across the European equity markets. So let's take this index here, the FTSE 100, apart and put the position we're at the moment on from the close on the cash session on Friday. We're now looking at gains on this market at the moment. And you can see here this vertical dotted line is where we closed out the cash session yesterday. So looking for gains across the London markets at least. And as I said, we've also got a positive view on what's happening on the German DAX as well today. After a positive session yesterday, we've got that market just peeking over the top of the close of the 24-hour candle yesterday and looking for a positive start as well on the German DAX. French CAC 40 had some negativity earlier on, and indeed you can look here, the French markets at the moment looking as though they're going to hold on to what was a negative trading day yesterday overall. And we've got that market just treading water on the French CAC 40. Let's take a look at what's been happening overnight in the Asia Pacific markets, where we've seen gains on the Nikkei 225, but losses once again in Hong Kong and the Hang Seng, down in excess of 2% in today's session, and also a marginal loss as well on the S&P 500. Now, all this followed what was a mixed day yesterday on the US markets, with the Wall Street indices showing us with losses on the Dow, but gains on the S&P 500 and also the NASDAQ composite. Late last night, we saw a 15% rise for the traded shares of Gap after the earnings numbers. Just want to show you what's happening in 24-hour markets on the Dow at the moment. We've got this market trading at 34,974. Remember, I showed you that the volatility markets were on the way down. And this is the reason why. As we got this rise at the moment, possibly we might be expecting a little bit of a drop at the start of today's trade. We've got quite a lot of water to pass out of the bridge. But when looking at shares like this, you can see why there was pressure built for some of these indices. This is Walmart yesterday. Massive decliner on the way down yesterday. In fact, lost 8.26% in extended trade late last night. Stock coming through with earnings yesterday, which actually looked pretty good. But what the company was saying was, in the event of what was happening, it really couldn't give a particularly good outlook going into the Christmas and New Year period, the last quarter of the year, because of concerns about the consumer and the failure of many to really be able to afford too much. That being said, like the Dow yesterday, we saw the NASDAQ hold on to recent gains. And indeed, that peak high that we saw on Wednesday was a 10-month high for the NASDAQ. So we're not too far away from that recent high on the market. So despite the fact we've got a little bit of a hesitation that starts today's trade on Friday in the context, it really is all about what's happening in terms of the moves in the longer term, holding on to recent gains. Now, the cost of living here in the UK continues to bite. We've seen what appears to be some frail numbers out this morning for retail sales. British retail sales volumes falling unexpectedly on October, stretched consumers staying at home in a new warning sign for the economy. These are the numbers. Retail sales volumes down by a margin of 0.3% month on month, following a revised 1.1% drop in September, which was worse than first estimated. Economists polled by Reuters had forecast that sales volumes on a month-on-month basis would rise by a margin of 0.3%. The Office of National Statistics says that retailers suggested that the cost of living, reduced footfall, and wet weather in the second half of the month contributed to the drop in these numbers. Now, we're following what's happening with sterling on the way down against the US dollar in the session in today's trade. I want to show you what's been happening in 10-minute candles just to get an idea as to, you can quite clearly see the drop in sterling as a result of what we've been seeing here for retail sales this morning. These are 10-minute candles. That's the 7 o'clock release of the numbers, and you can see we are at the bottom of that index as well. Just want to show you what's happening with sterling against the euro, because this strips out what's going on with the numbers against the dollar. And you can see exactly the same price action on a 10-minute candle chart here with that drop we saw against the euro at the release of that data today. On the daily basis, if we close at these levels, it'll be the lowest close we've seen for sterling against the euro since the 5th of May 2023. Now, the ECB is in a very difficult tight corner. From the euro cross of this point of view, is that there is still inflation in the eurozone, but they've got dire growth numbers, and many are speculating that in fact the eurozone is already in recession now for this year. But nonetheless, despite that, sterling down against that slightly stronger euro. Now let's take a look at what's been happening later on today, and what's likely to happen, I should say. We've got numbers out in Canada. We're looking for producer prices expected to fall 1.2% in October year on year. Raw material prices forecast to rise by 3.2% on an annualized basis. I want to show you what's happening with the Canadian dollar. It's shrinking against the US dollar in the longer term picture. This rising line of support here is for the dollar up against the Canadian dollar. Now, since the lows we had back on the 14th of July, all the way down at 130.92, we're currently trading 137.62, not too far away from the recent highs that took us up to levels that we'd not seen on this chart since the 13th of October last year. So likely to see a continuation. If we do get these numbers coming through, continue to show some frailty, I think we could well end up seeing further gains. If you are long on this, your stop goes under the underside of this rising line of support. Meanwhile, in the US later on today, US building permits expected to fall by a margin of 1.5% in October compared to September. Housing starts poised to decline by a margin of 1.3%. Now, let's take a look at an event next week that could well give us some trading volatility. This has in the past been driven by us as a risk event, but we're talking now about trading volatility. And I don't want to highlight just one particular event, because I think Wednesday could bring a couple of interesting opportunities here to trade the euro dollar. First of all is the FOMC minutes I really want to focus on, because this will describe the sentiment from the last Federal Reserve meeting where they left interest rates on hold. And the suggestion was that there may not be any move until, well, certainly not until they start cutting rates. In other words, the flatlining at recent highs. We've seen evidence recently suggesting that the Fed could actually end up cutting interest rates by May next year. But that has been blown away. Now, that saw a big rise in the euro, a loss in the US dollar. Since then, we've seen a slight reversal for that strength of the dollar as people want to sort of take a check on all this. Also on Wednesday next week, we get flash Eurozone consumer confidence. Now, the way to trade this, let's take a look in more detail about what we're expected to see. If we do see a continuation of this dovish Fed, we could well end up seeing some further highs for the euro dollar. Now, if you are long on this, going into the numbers next week, then you would look here to put your stop underneath this area down here to around about the 107.30 level. 108.30 is where we are. Price target is up here at 109.45. My idea is that we've got this rising line of support, these higher lows that we've seen as a continuation, and we got the higher highs. This is just a question of a retracement in what is otherwise a market which continues to move up. So that's the idea for this. And you put your stop at around about, as I say, the 107.30 level to give you some protection in case there is a continuation of this market and it takes you out. But I think longer term, if we do get further evidence that the Eurozone is looking as though it's more likely to raise interest rates than the Fed, I think we could well end up getting further highs for the euro against the US dollar. So price target 109.45. We're trading here at 108.37. Your stop is at 107.30. Now, late last night, we saw earnings out from Gap, the clothing retailer in the States. It doesn't trade all sessions on the IG platform, but it did move. It saw a better than expected third quarter late on Thursday, but the clothing retailer still appears cautious ahead of the Christmas and New Year period as it works to reverse slowdowns in Banana Republic and Athleta. The company, which also runs Old Navy, far exceeded Wall Street estimates for profits and same-store sales, but only reaffirmed its full-year guidance and expects holiday quarter sales to be flat to negative. You can see the numbers here, 59 cents against 19 cents that had been expected. So a massive beat on the earnings front, with revenues also better than expected. But I think if you look at what's been happening in the Gap shares, now there was, as I say, a 15% rise in shares late last night, and that would take us all the way up to this level up here, which coincides with the highs that we saw here back on the stock back on the 3rd of February. If it was a true 15% rise, in fact, that would take us then to levels not seen since the 14th of February 2022. So things looking good for Gap, despite the fact we saw a drop yesterday for Walmart. It's been a good week for retailers overall after those earnings out earlier in the week from Target. So that is what's happening there with Gap. Gap hasn't managed to reverse its ongoing revenue slump, but its same-store sales were far better than expected. So I think, broadly speaking, looking for a positive start when Gap gets underway at the US markets later on. Now let's steer the conversation away now into other areas of the market and back to one of the headlines this morning. That is the price of oil. The price of oil continues to drop. There's real concerns about the outlook for demand. Let's take a look at Brent, where we are today after the big slump that we saw yesterday. One of the biggest downside candles that we've seen in this market since May this year. And it took us through a couple of really interesting levels of support. But currently trading at 77.57. We got support of 79.17 taken out, which were the lows we had back on the 8th of November. And then again, the lows we had back in the 18th of July at 78.07 also taken out. Where do we go now? Well, you've got to look for the next line of support. It's all the way down here. You can see a number of tests of this line here, where we saw 71.84, the next line of price target to watch out for if you're short on this. If you're short at 77.57, stop goes above 80. And as I say, with a view to price target at 71.84. So that is for the price of oil. Staying on what's happening with these commodities, as we see interest continue in the price of gold. Another gain today at 1985. I suspect we could well see 2000 being the price target for many people in the gold market at the moment. If you're long on this, stock goes underneath this 1980 level. 2000, the price target, with gains once again. That's it. I will be back, we'll be back at 10:30 this morning with a look at some of the charts we're watching on charting the markets. And later on at 1:30, we'll get the Beat the Street. Angeline Ong will be with you looking through some of those stocks to watch. We'll get a further indication as to how the open is expected on the Wall Street benchmarks, but also for Gap today, which at the moment at least showing gains of 15% last night. We'll have to see how things trade in the early markets and work out just what it means to Wall Street Open when things get underway later on today. That's at 1:30 with Angeline Ong. That's it from me. Have a good weekend. I'll be back next Wednesday.